Hello and a very warm welcome to all the viewers of 3.0 TV. I am Manoj Dara. So, as we step in 2023, we have seen the market recover from its all-time low, which was actually made in the broader part of the 2022. To explain the entire cryptocurrency market and to see what the future is in 2023, we have invited three special guests. So very quickly, Chandan Samrat has mentioned about proof of reserve. I have a big question on proof of reserve actual functioning. That's my view. It can be different for you as well. So an Indian-based exchange has recently released its proof of reserve holdings, wherein it is actually having $285 million in actual assets, proof of reserve. It has actually declared. So my big question is, can an exchange declare something which is, they are holding, say for example, they are having their holding 6 trillion in Shiba Inu, 6 trillion tokens of Shiba Inu. They are having roughly around 8 to 9% of Ethereum. They are having roughly around 10 odd % in Bitcoin. And the financial markets I am there in from last 20 years. I haven't seen such kind of mechanism work wherein ये ऊपर जा रहा है market तो बहुत अच्छा लग रहा है. When the market is coming down, what is the total situation of this proof of reserve, and what is the credibility and reliability as far as the claims which exchanges make these days?
All right, that's a question which will always remain a question. The problem is this. See, the proofs are actually the assets that institution or the exchange holds. Now, if you are an exchange, I'll ask you.
Yeah.
It's on you what you want to reveal.
Fantastic.
आप वही देखते हैं जो आप बताना चाहते हैं, वही दिख पाता है, ठीक है? So if on that note, an exchange is there, and it's showing that they have got $1 trillion of Bitcoin with them right now, and they say that we have also got $1 trillion of Ethereum with us right now. With no means, you can assume that they have also got $10 trillion of Shiba Inu with them. There is no chance of getting to know that. See, to overcome this, there is a natural nature of business which can help us out in this. More and more competition. When more and more competition in exchanges will come, this monopoly will always be there as a fear factor in them to be on the truth side always, because as soon as a scandal like FTX will even come into the ear of the investors now, they will remove their funds from there. And then, of course, then eventually the exchange will collapse. Moreover, of course, for DEX, for decentralized exchanges, I would never go as an investor, or I would never advise as well for people to go, because as an investor, you need a regulated thing.
Fantastic.
Taxes are not a problem. When people earn, they are eager to pay proper taxes because they're earning good. It's a very big opportunity with cryptocurrency exchanges. But regulations should be there. Complete knowledge should be there. If there are consultancies who are helping out people or who are helping out institutions as well, these should be licensed consultancies. If there are traders, they should be licensed traders. If there are, complete regulations should be there. Then only you can be, you can rely on the system completely. That's
Varun, your quick take. Chandan has actually made a valid point. What's a quick take on the POR mechanism, which has actually currently been disclosed by all the exchanges, since you are working for an exchange as well? If you can just simplify this for our viewers.
No, absolutely. So what Chandan mentioned is absolutely correct, right? And let's take a step back, right? So in our traditional equity market today, the reason we have a lot of intermediaries, it's basically to avoid the conflict of interest, right? So what you saw in FTX happening is an exchange playing multiple roles, right? So as an exchange, you are just a facilitator between buy and seller. You are not a bank.
So prop trading and exchange business will never go hand in hand. That's what we have seen in the financial market. And FTX is the best example. You correctly pointed out.
Yes. So if you are an exchange, you are it's a very simple formula, 1:1, right? And being regulated, both the exchange and if you have a native token, things an obligation, for you to prove a fiduciary responsibility, right? You need to do regular audits, regulatory filings, and, internal governance, right? Will no more, be a checkbox exercise, because earlier it was just a checkbox exercise, but going forward, it would be one of the criteria, the strict compliance, licensing terms, right? So all this will matter. While we started with this proof of reserve, it's a good start. But there is a lot of things which will uncover, because, as I said, investor will only become smarter, when he gets into these things, right? So he will try to see what's that wrong happened previously and what is that better I can do. And there is always learning from the traditional market, right? The traditional finance market, because they are regulated. There is a mechanism, to see the disclosures, to see the, internal governance things. So I think this will carry forward to an exchange. And exchange, again, very simple formula, 1:1. You are not a bank, you are not a funder, you are not a lender. Your pure play role in the exchange is to be a facilitator between buyer and seller, right? So that simple it's going to be.
Very nice. Samrat, a quick take on the POR mechanism, which is actually the trend as of now.
Yeah, as I said, I think the only thing to look out for is serving a momentary purpose, so it is short term. It has to be followed up by corporate governance changes, and that's something which I'm more keen on, keenly watching that who's developing and how people are adopting it.
All right, that's all there is in this special segment on Digitally Unplugged. Stay tuned on 3.0 TV for more such interesting views and updates and interviews. Thank you.